Okay, welcome back everyone. Let's get right into the stock market technical analysis. Drop me a thumbs up, guys, if you find value. I typically get about 250 thumbs up, but several thousand viewers. It only takes half a second. Just click the thumbs up. Please, I do appreciate that. Let's try to get over 500 this time, okay? So if you haven't hit that button in a while, hit it. It does help out. And I'll continue to try to find the trade ideas for you guys. Again, everything on the channel is just my opinion. It's just my analysis of the charts, but we do look for opportunities in the market when they show up. So let's get into the charts. Guys, Fed is coming up tomorrow. Big Fed meeting. So we can talk about that real quick. We're expecting a 75 basis point hike. If the Fed follows through on the 75 basis point hike, it's really going to be more about what's next. Now, I do anticipate, now this is just me, but I am anticipating that the Fed is not going to signal hawkish after this hike. So what they'll do is they'll do the 75 basis point hike. I think that's pretty much priced in now, and the market's expecting that. But they are not going to guide hawkish. They're going to talk about how they need to be data dependent, and they're going to wait and see for future hikes and yada, yada, yada. Basically, they're going to start walking back their hawkishness because we are getting to the point now in interest rates where if they go much higher or signal much higher, the economy is going to break, basically. So at the end of the day, I talked about how I think the Fed can only go so far. They're going to talk a big game, but they're only going to go so far, and then they're going to back off. They've also talked about how they're front-loading their hikes, and so that means big hikes in the beginning, and that's it, and little hikes in the end or no hikes. So I think this is probably the last 75 basis point hike. Then maybe they'll walk it down to 25 basis points or even just a wait and see kind of thing. All right, so that's it. I think the market's likely going to be bullish after the Fed, probably during the conference. Okay, so, and the charts are backing me up on this, and I'll show you guys here in a second. If the Fed decides to do less than a 75 basis point hike, say a 50%, that should be bullish for the market. And then if they hike more than 75 basis point, if they go the full percentage point, that should be pretty bearish, I would think. All right. Again, it's going to come down to what comes next, but we don't have a 1% interest rate priced into the market right now, so they'd have to price that in. So it'd likely sell off on that news. All right, so looking at the charts. On the daily chart on QQQs, this is tech sector. We're coming down into support. All right, I've got support right here at about, there's a gap from back here, but basically anywhere from 294.92 up to about 296.22 or so, kind of a zone of support. And basically you can see here on the hourly chart for QQQs, that's kind of this range right here. You can see support, that was resistance. Now we're back down into this. They've undercut it a little, but again, it's right before the Fed. So, take the price action right before the Fed with a grain of salt. I suspect it holds a support. If for some reason they don't, this doesn't hold, maybe it continues to sell off into tomorrow's, early morning session. We do have an uptrend line to watch right here. Uptrend, uptrend, uptrend. So we could sell down to that uptrend. Okay, I'd be a buyer right there until that trend breaks, and that's it. That's really what I see. Again, we had bullish divergence that was building for a while back down in this area. We have rallied, but I am looking for kind of one more leg up. Probably up to this 327. There's a zone of resistance right here at 315, up to 326 or so. So that is my final target right up in there. I think we rally and get into there, and then that would be it. I'd likely want to flip short for a swing trade for the next leg lower in the coming months. Yeah, that's what I see there. S&P 500, so again, similar look here on the S&P 500, which I don't chart a whole lot, but you can see we basically have a zone. It's right in there. So that would be, you can see we gapped down right here, and then it was resistance, resistance, finally broke out and we are coming back down into support. So that's support until it's broken or improving. Otherwise, it is support and it should hold. However, it's right before the Fed. So, you know, taking big positions right before the Fed can be kind of a crapshoot. So we do have to, you know, take it with a grain of salt. But I am expecting it to hold and to rally from here. Likely if we rally, it's going to be a pretty strong rally. Probably run right up to this 401.39 and then continue higher up to the 200-day moving average and this downtrend line up here. So about 430 on the SPY is the final target for any kind of a rally. You can mark out an uptrend line. It's not as clean on the SPY as it is on the Qs though, so I don't really like that one. Okay, let's go through Tesla, but before I do, guys, if you're interested in learning this as a skill set, how to manage risk, find trades that have a favorable risk-reward ratio, candlestick analysis, divergence analysis, several concepts that it takes to really be a successful trader, take my course, link in the description below. I put that together at the request of my subscribers. It's about, 4 hours of video training, and I also give you a checklist on what to look for high probability trade setups. Link in the description below. All right, just click that link. It'll take you there. It's not free, but it is affordable, and I think there's a good value there. So check it out if you're interested. Okay, Tesla. So Tesla, same kind of look at support. You know, if I go to the hourly here, now Tesla's kind of choppy, so it's more of a support zone. I think it can be anywhere from where we're at down to about right in here. Looks like, oh, my line got jacked up. Somewhere right in here, you know, is a zone of support. So we broke out, clear breakout here. That breakout didn't come with negative divergence. You can see here on the hourly chart, we made a higher high in price, higher high in momentum. So it's not a breakout that has a high probability of failing. In fact, I'd take it the other way. We broke out, we're coming in for a back test, and I think there's another leg higher. So looking at the daily, I don't know, probably run up to the 200. That's what I'd look for on Tesla and likely get rejected. You might, if you get up there, you're probably either going to stop short or slice through it and then fail. But I would expect that we roll over somewhere in that area after that next leg higher. Okay, the dollar. If the market rallies tomorrow, it's likely signaling the Fed is done hiking, at least for the short term, and the dollar should sell off, all right, based on that. So watch the dollar. On the daily chart, I've got this uptrend line we've been watching. We have been building negative divergence on the dollar for quite a while here. So that remains intact. All right. Both momentum indicators, the RSI and the PPO, give me negative divergence. So if we sell off, we're likely going to come down to the trend line. All right. Probably hold that trend line there and, you know, maybe bounce, you know, likely going to get a little bounce. And then I think in the future we break. Okay. But until you see the break, no break of trend. But on the news event from the Fed, I think we could sell down to the trend line. So watch for that. And in that, if that happens, and again, that's the probability. It's higher probability that happens versus we rally, only because this negative divergence remains intact. It's there telling me that we're likely going to sell down. However, I'm not shorting the dollar because in my strategy, I don't short until we break trend line support. And that's this trend line right here. So no break of trend line support. On gold, you know, this is the daily chart, but you can see big support right here at about 1680. We've held it several times, held it twice right through there, held it there, and we're right there holding it so far. So until that breaks, it is support, and we could rally from here. No bullish divergence there on the daily chart, though, on gold, at least on gold bullion. So, you know, not the best setup. You know, I think it needs to do a little bit more and, you know, show me a little bit more before I, you know, get super bullish on it. Netflix here, a little bit more downside to get to support. So I don't know what it's going to do. We've got obviously earnings coming up. Or no, actually earnings is already passed. But a little bit of more downside. Support's about 450. You're likely going to get a bounce off of that. All right. So I think it comes down, bounces, continues higher. The thing is that this is a big week, all right? We have the Fed, we have the FAANG stocks. Microsoft, I believe, is tonight. We can look at that real quick. So, you know, with these big market moving earnings and Fed event this week, it makes sense to kind of keep it light. So what I am planning on doing, I am long right now triple Qs because I do think we're going to get a bounce here. However, I'm not really positioned in individual positions. Okay, there's earnings that are coming out. There's big events that can move the individual position. So I like the fact that the triple Qs adds some buffer because you've got 100 different stocks. It's the NASDAQ 100. So if you get a big drop in Microsoft, maybe you get a big rise in Google, and it kind of averages out in the triple Qs. So that's what I'm doing. Microsoft is at support right now. You can see the trend line here. This is coming off your June 27th or June 2016. You got support. There's a third tag of it. There's another, and we're right there now, right before earnings. So I don't know. It could go either way. We could break trend here, or we could get a bounce. So at the end of the day, keep your positions mild, keep them light. I don't think it makes a ton of sense to take huge positions right before this big week. It's better to let the earnings get out of the way, let the Fed get out of the way, and then we'll reevaluate and find opportunity. That's just my opinion, but that's kind of how I'm treating it. So that's all I got, guys, for today. I'm going to get this one out, and Fed's tomorrow.